There we are. Hello, everyone. I think we're just going to wait a few seconds as people start to join. But as you can see, we're going to start off with some housekeeping anyway. Just to let everyone know that this session is being recorded. That will be available afterwards. You'll automatically get a link to that, and you can watch back, as I'm sure you'll have loved the content so much you'll want to watch it more than once. If you do have any technical issues, do just kind of leave the meeting, rejoin. If it's not working after that point, go ahead and email our marketing team. Email address on the screen now, but hopefully should be all okay. Last point, we are doing a Q&A session towards the end. It should be a valuable part of this for you guys. There's a Q&A box down the bottom of the screen, so go ahead, drop any questions in there. Can't promise we'll answer everything, but we'll get through as much as we can. Anything we don't get through, we will follow up afterwards, so it's still worth dropping your questions in there. Awesome. So we're lucky enough today to be sponsored by World Trade Center Denver. World Trade Center Denver help businesses enter new global markets with confidence. They help make strategic connections through their local and global networks and offer expertise and support to international businesses. Big part of World Trade Center Denver can open up the world for both you and your business. Go ahead, check out their website. They really are an awesome kind of organization. So please check them out. They're a good resource. Great. So here we are. I guess to get kicked off, thank you all for being here. We really appreciate you taking the time. I apologize. We are on Zoom again. I'm sure we're all sick to death of this, but fingers crossed it won't be long before we can do this sort of thing in person. Any day now, hopefully. But we are hosting this event today. It's part of a kind of wider virtual tour we're doing as ZEDRA, kind of coast to coast. We had an event last week in New York that kind of focused on fintech and the future of fintech. We have another one next Wednesday in San Francisco, focusing on the future of Silicon Valley, certainly in light of the pandemic and the future of talent and what that means for remote working. I know a lot of you guys joining us today are from Colorado. That's probably quite an interesting topic for you guys too, as hopefully one of the states that benefits from that. But to kick off our content today, I think it'd be good to start with some introductions. So I'll just whip round one individually. So Chris, could you kick us off maybe?
Thanks, Nick. Yeah, my name is Chris Stack. I'm a partner in Cooley's employment team, and I'm based in Cooley's London office. I do all things employment, so everything from expanding into the UK and helping companies with that first hire, all the way through to anything that happens during the employment life cycle and terminating at the end. And if it all goes wrong, helping with the litigation that might ensue afterwards.
Awesome, thanks very much. Stuart, can I throw to you?
Yeah, sure. Thanks, Nick. So my name is Stuart Sanchez. I work in the fintech team at the UK Department of International Trade. Predominantly work in helping UK fintechs expand into some of our high priority markets. Those are right now the the US, Singapore, and Australia, and also vice versa, helping fintech abroad expand into the UK and being well versed in terms of the UK's regulatory and policy environments that is being favourable to fintechs, helping to expand in the UK.
Perfect, thanks very much. Eamonn?
Thanks, Nick. Hey, everyone, my name's Eamonn. I'm the Managing Director of Techstars here in London. So Techstars is a born in Colorado company from Boulder originally. We are the worldwide network that helps entrepreneurs succeed. So we invest into companies, we put them through 3-month accelerator programs, introduce them to great mentors, advisors, investors, and people who can help them grow and scale their businesses and support founders as they enter, in my case, the UK market. I previously ran one of our programs in New York, so watched companies expand into the US that way, and have had over 2,500 companies that we've invested in over the last 14 or 15 years, who we've supported as they've grown and expanded into new markets. So I've seen a lot of the good, the bad, and the ugly of what's to come for many of you today, and we'll hopefully be able to give you some good advice and answer some interesting questions.
Awesome, thanks so much. And finally, Kiki.
Thanks, Nick. Yes, I'm Kiki Stannard. I'm Managing Director of ZEDRA London. ZEDRA is a global professional services organisation providing global expansion services to businesses, active wealth and trust administration. ZEDRA London is focused on global expansion, and with our office in North America for the past 10 years, we've seen most situations when helping US businesses take that first step into their global market, hopefully to the UK and then beyond. My particular interest is people from a tax background. I've been involved with international assignees, HR, compensation and equity. And I was also an assignee to our San Francisco office back in 2019.
Awesome, thanks very much. Now, obviously, we're here today to talk about the UK, the market, and what US businesses can expect from us and our business environment, but also why the UK is a great place to expand to and the opportunities that provides. And I think based on Kiki's bio you've just given there, it's a great place to start. So I'll pass over to you.
Okay, thanks, Nick. So yes, where could we start? Well, maybe we should start with the obvious and just say that, of course, the US and the UK have always had a very special relationship. It goes back a few hundred years at least. And whilst there's been some ups and downs, I think there's more ups rather than downs with that relationship. And that extends to business. So US-UK trade remains very healthy, even during these past 12 months, which have been more difficult. There are some obvious reasons why we have such a good relationship. We speak the same language, sort of, and of course we're 1 hour closer to the US than mainland Europe, which just makes doing business with us a little bit easier. I have a few of my clients who've taken this step to sort of set up in the UK, and they've all commented recently that the UK is much more technology minded as consumers than perhaps the rest of Europe. And we're also more willing to try new technology than other nations. So if you are thinking of bringing your new tech and your new products to the UK, I'm sure you'll be met with very willing buyers and people who are very interested in what you've got to offer. In terms of talent, there's certainly plenty of talent in London and in the UK generally. I'd say that this is probably partially due to businesses having strong links with top universities here and also research facilities. And of course, London is recognised as the tech hub of Europe, and really does attract the best and the brightest of people with those exceptional skills that you might be looking for. So it is the place to be. And I think we've also got numerous sort of accelerators, incubators, hubs, and all kinds of support facilities for the young, the innovative, the brave, with all those new ideas. So it's a very welcoming place to be if you've got some new products and you want to make more of it. I'd say we've got quite a job market that's quite active. There certainly shouldn't be a shortage of great candidates to hire, although it can be a little bit of a squeeze to get those offers out and accepted. And of course, the UK can be considered an expensive place to operate and live. London probably more so, but it's just comparable with other major cities around the world. You can locate yourselves outside of London for lower costs, salaries, office space and general living. And we do have an extensive public transport system. So you've got to remember, we're a small island. So the UK is about 10% smaller than Colorado. We've got nearly 67 million people here, and 9.5 million of those are in London alone. So wherever you are in the UK, you're usually just a short distance away, probably compared to what you're used to in the US. So yes, all nice and compact and quite small. A couple of other points. We are a relatively business-friendly environment. We do have some regulation, but not too onerous, and actually quite supportive. So a good example is the Financial Conduct Authority runs a sandbox to test new fintech ideas so that they can do that in a collaborative environment, so that the FCA want to learn about fintech and want to know what's going on so that they can adapt their regulation to make it a very welcoming environment for you to test your products. And I think we have quite a welcoming combination, quick company startups, reasonable rates of corporation tax. We've got some great incentives, which I know one of my colleagues is going to talk about later. Great incentives for research and development and private investors. And pretty friendly from an employment law point of view. We don't have quite so many restrictive practices in terms of unionisation and works councils as perhaps Europe. And some rather good tax efficient equity plans, which can provide stock options to your employees in a very tax efficient way, which is always used by our US business clients for their UK employees. Just finally, I'd probably say we promote flexible workforce, but we are seeing a little bit of a challenge to the gig economy. Uber's just lost a high profile court case, but it's really just to treat their drivers as workers for minimum wage and pension entitlements, and not for absolutely everything. I would just encourage you, if you want to, you can put this on your Zoom chat. If you would like to have a copy of our London Calling report, which goes through a number of these reasons why London is so fantastic, and we can send that report to you. Just let our admin know. So yes, I think overall it's all very encouraging. And in fact, the Boston Consulting Group surveyed recently and found that yet again, London is named above all cities in the world as the destination to move to and work in. And I can certainly vouch for that. Have I been too gushing? Sorry, Nick.
No, I'll agree with you on that one. It's a brilliant place to work. Certainly a brilliant place to do business. But I know that you've obviously worked with hundreds of companies that have gone through that expansion and have moved because of a lot of those reasons. But in your experience of helping those guys set up, particularly with the HR and the people side of things, what are the sort of common mistakes you've seen with people doing that?
Common mistakes. Probably making an employee an offer for employment, but not having actually planned any of the infrastructure to support them and pay them. You don't need lots and lots of time to set up an entity, but you do need to do that, and a bank account and a payroll. I would have thought 3 months would be time enough, but if you want to spend a little bit longer, then that's good. Probably one of the other things is just not understanding what is different in the UK compared to the US and which items are the same. We do follow some of the same rules, and some of them are very similar to the US, but others are very different. So it's good to know what's different and what's not. So for instance, we have a compulsory employer pension requirement where the employer has to pay at least 3%. But on the converse, we have a very comprehensive national health service. So not all employers would provide private medical insurance. And those who do, that medical insurance will be considerably lower than US premiums, and there will be minimal deductibles. So there are some things that are very positive, and then there's some others that are just very different. Yeah.
Definitely. Yeah, no, and it's interesting you touch on the people and the kind of employment offers and HR side of things, because I know, Chris, you're going to cover some of those things shortly. So I think rather than me asking another question, we'll move straight on to Chris to hear your side.
Yeah, very, very, very happy to do that. So if you decide you're going to make that move and you're going to venture overseas and you've decided that the UK is the place that you want to land, often the first question that you're asking is, well, how do we engage the people? What method are we going to use? And broadly speaking, there are two. You can either grow organically, by which I mean you've identified talent, you've identified a particular person or people that you want to engage, and you're trying to work out how you can engage them, and you're thinking about the right method for doing that. Or you can grow by acquisition. And by that, I'm really talking about a strategic acquisition where you've identified a particular target entity in the UK, an existing business or existing company or an existing product, and you want to acquire that because that's going to give you the foothold that you want in the UK market. I'm going to focus today mostly on talking about organic growth. And the reason for that is that certainly in my experience, growth stage companies tend to grow organically because they've identified talent and they want to engage that talent in a particular way. And it's something that I talk to US headquartered clients about on average at least once a week. It's a conversation I've had with 2 clients already today. And so it's one that I'm very, very familiar with. And I suspect lots of the issues that I talk about will be ones that are familiar to lots of you too, if you're thinking about these issues. Because of the time constraints today, I'm going to focus purely on the sort of structural engagement of people and not on the other issues you'd need to think about when you're setting up operations in the UK, like tax, and data protection and immigration, which are all eminently doable, and none of them are too difficult, but they just go beyond the time that I've got today. So then, if you're going to grow organically, what are the ways in which you can do that? How can you engage people in the UK? Well, often when I talk to clients, the first conversation that I have with them is one that goes along these lines. We found someone in the UK and we will engage them as a contractor. And so what do we mean by a contractor? What is a contractor? Well, the really good news is for everyone who's based in the US is that a contractor in the US, the classification of a contractor means something very, very similar, if not the same, as it does in the UK. Genuine contractors, genuine consultants are self-employed. They are in business on their own account. Within reason, they're not subject to direction or control in the way they provide their services or how they provide their services or when they provide their services. You can engage contractors directly. You can engage an individual person as a contractor, or you can engage them through their personal service company, in which case you're engaging a company to provide the services, and that company is agreeing to provide the services of an individual. Contractors are paid gross. You don't make payroll deductions for genuine contractors. They own all of the IP that they create unless there is an express assignment of that IP in the contract under which they provide their services. And so it's possible that you could be thinking, well, we want to get into the UK market. We don't want the administration of having to set up and have employees there. That seems a bit too difficult. We're going to engage them as contractors instead. And that's an understandable thought process. And the question I would always say that you ask yourself is, and you'll get a good sense of the outcome of this by thinking about it in US terms, if this person was going to be engaged in the US, would they be an employee or would they be a contractor? Or if we engage them as a contractor, would that be the incorrect classification? And if your answer to that is yes, they'd be incorrectly classified as a contractor, you'll probably find the answer would be the same in the UK as well. And you might be able to justify that risk for a short period of time while you test the market, but longer term, it's going to start to represent some risks for you. Which moves us on then to talking about how do you engage employees in the UK? And that's really the compliant way of engaging people that you really want to have direction and control over, those that are genuinely your employees. It's a really well-trodden path. Kiki has referred to lots of really helpful thoughts, hints and tips on how you engage employees in the UK and why the UK is such a great environment for engaging employees. Because although there are differences with labour laws in the US, there are also an awful lot of similarities. And so the employment law landscape in the UK really isn't too difficult to navigate. If you need to have employees, you need to have a robust employment contract. That's going to be much, much longer than you're used to in the US, but it's going to be a bit like having your offer letter and your CIIA or PIA all rolled into one with all the other great protections that we would suggest employers have in place. You'll need to run payroll. As Kiki mentioned, you'll need to have a pension scheme in place. You'll need to have employers' liability insurance, similar to workers' comp, think of it in the same or a similar way. You'll need to provide some notices and have a few policies. But most of it's pretty off the shelf, particularly for rank and file employees. So as long as you've thought about it in advance, engaging employees in the UK really won't be too difficult. But for some clients, they think to themselves, or for some businesses, they think, yeah, even though that sounds okay, I really don't want to do that. It seems like I've got a lot of hassle there. Can I just outsource that to someone? Well, there are service providers that can help you with lots of that, but sometimes companies think about using a PEO, professional employer organization, or an employer of record. And so I thought I'd touch on those very, very briefly. The general selling point with PEOs is that they will solve all of the compliance of you having employees in a jurisdiction outside of the US, and there'll be a one-stop shop for doing that. And structurally, how that happens is you engage a PEO service provider, and that PEO service provider says, I will use a local in-country employer, a UK subsidiary entity, to employ individuals in the UK for you. And that will be under a UK employment contract that complies with English law. We'll make the right payroll withholdings, and you pay us a fee for that. And actually that can seem like quite an attractive option. But I would say there are just a few things to note if you're thinking about that. And the first is that using a PEO can be quite costly compared to having your own employees directly. So it might work for the one person on the ground, but if you're going to have 2 or more, engaging employees directly is likely to be more straightforward. You have to be careful that IP has been assigned correctly from the employee that's created it up to the local employing entity, the in-country employer, and then across to the PEO, and then across to your company, because you're going to want to make sure that you own the IP, particularly for IP generating employees like engineers. You're going to want to make sure you own that IP, crucially important, and often it's not properly owned under that PEO structure. And you're going to want to make sure that your confidential information is protected as well. So there are the 3 methods that you can engage individuals through growing organically. The 4th is this sort of strategic acquisition. And I don't really have time to talk about that today, except to say that if you're going to acquire an entity in the UK, it will look a little bit different. The acquisition will look and feel a little bit different to the US, but conceptually it's going to be pretty similar. You either acquire all the shares of that entity, or you can acquire the assets of it. Although that might be an English law governed purchase agreement, it won't seem too different to what you might be used to if you had an acquisition in the US.
Awesome, thanks very much. It's I'm sure there's plenty of attendees that are on the cusp of trying to make that exact decision. What makes sense for them? Is it contractor? Is it starting a company and registering a payroll and employing someone, or does that PEO solution work for them? I guess, how would our attendees go about figuring that out? How does someone decide which of those 3 options is the best one for them?
I think it's all about considering what your business plan really is. Are you just testing the UK market, in which case finding the right consultant and engaging them for 2-3 months to see if it's really a viable place for you to do business might be the sensible way to go? Or have you actually gone through that process and you've identified 2, 3, 4, 5 hires, and you know that there's the right business opportunities for you, in which case employing them directly will be the way to go. If it's the case that you've got loads of employees who want to work remotely, perhaps as a result of the pandemic, and employees want to work from lots of different jurisdictions, and you're going to have 1 employee in 20 different jurisdictions, that PEO model can be a really good way of having a one-stop shop for you. So ultimately, there is no simple, correct solution for all businesses. It's just thinking about what is our plan and what is our plan for the next 12 to 24 months, and then using that to identify whether or not we should put the infrastructure in place to have an entity and engage employees directly.
It makes a lot of sense, and I think this last 12 months has taught us anything. It's thinking slightly further ahead when we're starting to formulate our plans. But great, thanks very much for that, Chris. I'm gonna shift over now. We'll start to look at a little bit more of the regulatory and governmental perspective. And Stuart, I'll pass over to you.
Yeah, thanks, Nick. So there are a few things that we can talk about today. I thought it would be good to touch upon a few of the aspects that have enabled the UK to really place itself as a global fintech hub. Evidence consistently tells us that UK is in the top positions for fintech investments, and is usually quite evidenced by the fact that you've had companies like Revolut last year raise $500 million. You have Currency Cloud and Starling Bank also both raised $80 million. And you also have this year, Checkout.com with a phenomenal $450 million fundraise. And I think one of the factors that has definitely enabled this to happen is the government's policy towards fintech and the infrastructure it's put in place to allow for that favorable investment environment. So I think usually fintechs in the UK consistently tell us that the UK's policy environment is more mature and progressive than other markets. You also got the FCA's pro-competition mandate that appears to be a source of differentiation in that side of things. There's also key initiatives that are always cited as enhancing that innovation landscape. And I think Kiki also mentioned the FCA's regulatory sandbox. And I think to add to that, there's also the open banking and payments infrastructure that the UK's put in place. But I think in terms of the regulatory sandbox itself, this is kind of helping growing fintechs, test their products in that kind of safe environments in front of real consumers, and ensures that prototypes are regulation compliant. And it's an important step towards reducing the regulatory burden on new firms. And it's already supported 6 cohorts of firms, and I'm sure this is going to ramp up now that the FCA has taken a really pro-competition approach to things. You also had last year, the FCA announced it's working in conjunction with the City of London Corporation to pilot a digital sandbox, and which at that trial, they kind of digital testing environment provided support for fintechs at an early stage of development, and some of the features that pilot included, so things like access to synthetic data assets to enable testing, training and validation of prototype tech solutions. For example, you have the transactional banking data sets, SME lending data and customer accounts. You also have the API marketplace where fintechs provided access to services via APIs. You had integrated development environments in which applicants were able to develop and test a solution. There's also an observation deck to the FCA's digital sandbox, and by observation deck I mean it's a platform to enable regulators and other parties to observe in-flight testing at a technical level, and that really informs policy thinking in a kind of really safeguarded environments. Other initiatives that the FCA has been really hot on include the Green Fintech Challenge, and that was designed to really help fintechs develop innovative products and services in the green finance space, or help develop solutions that help companies assess how they're performing on ESG metrics. And I know that in the last 12 months, ESG kind of ramps up in the company agendas. So there's definitely lots of opportunities there for fintechs to really take on board. You also have the FCA's tech sprints that the FCA organises every year, which are 2-day events to develop tech-based ideas or even proof of concepts to address specific industry challenges. So I think so far, I believe the FCA has hosted 7 events with themes such as anti-money laundering, and financial crime, consumer access, and pensions. So that's on the FCA side of things. So when it comes to open banking, I think that's a really, really interesting space that the UK's been pioneering on. And fintechs also tell us that the UK is one of the few markets where banks are actually mandated to share data with other market participants. Although there are other markets that have announced policies and have initiatives in place around open banking, they're arguably at a very relatively superficial stage on that side of things, and don't necessarily have the level of depth in the market infrastructure that the UK has. Just to kind of give you a sense of where open banking has come from and that success, in 2018, the UK was the first country to take a government-led approach to the mandating of open banking, creating common API standards for data sharing across the largest 9 banks. And just to measure its success, there are now over 2.5 million UK bank customers that now connect their account to trusted third parties, and that's up from 1 million, I think, in January last year. So that shows you the level of growth it's experienced. You have also 180 firms in the UK that are permitted to share bank account data and payment information with third parties, and that was as of October last year. And just to put that in perspective, you've got Germany that comes in second with only 36 firms, and that's if you compare that to the UK's 178 firms, that shows you the level of difference. And that's also more than France, which is got 18. It's got Spain that has 9, Italy 6. That banks are permitted to share bank account data, so it shows you the UK is above its EU neighbours in that side of things. And that's probably likely because the open banking implementation entities enforcement of more unified standards on using open banking. And just as there's also for example, it's using the one messaging format and user experience, and that's definitely in contrast to European counterparts. And on open finance, there's definitely increasing conversation regarding how open banking can be taken forward. You've had CODEC, which is the Coalition for Digital Firms. They put out recommendations on how the government can try and use open finance to really try to give consumers a holistic view of their finances. And the FCA announced recently that it was going to use its legislative powers to steer the evolution of open banking to a broader model of open finance. And that was on the back of the FCA's call for inputs from industry in December 2019. So you can see there's definitely a shift towards open finance, which is a good thing, I think, for consumers, and also creates lots of more opportunities for tech companies and fintechs to really deal in this space. Also, the third aspect of things, I think, is definitely the fintech demand here in the UK, and that's clearly cited as being very strong. And we're always told about, the UK's fintech adoption rate is 71%, and that's a comparison to the global average of 64%, and it's higher than most of our European competitors. For example, over 95% of the UK has access to superfast broadband, and that's more than 95% of UK adults between the ages of 16 and 54 that have access to a smartphone. You also have the Fintech Pledge, and the Fintech Pledge was an agreement that was set up by Tech Nation in September last year, and it's basically a way for banks to provide fintechs with clear guidance on how the onboarding process works by a dedicated online landing page, and provides with guidelines on how the fintech can basically onboard for the bank. And those are things that weren't there before that, and things that we were told that fintechs needed to basically have more traction within banks. So we started this process, and hope to hear more from that in the next 6 months and how that's developed. We also have definitely financial institution demands for fintechs, and I think there was a recent survey done that said that 85% of financial institutions expect to increase fintech partnerships in the next 3 to 5 years. And I think it's good to also talk about what the Department for International Trade is doing to really enable fintechs to establish themselves here, and UK act as a global launchpad into other markets, especially at a time now that there's negotiating free trade agreements with Australia. We're looking at India as well, and we also recently signed one with Japan. We also have UK Fintech Bridge agreements, and these are agreements that are between the UK and priority markets such as Singapore, China, South Korea, Hong Kong, and Australia. And I mean, there are agreements that set out conditions to enable closer and strong collaboration when it comes to speaking with other governments, financial regulators, and industry. And these are really predominantly around reducing access barriers and creating that sort of platform where one regulator in the UK can speak to another regulator in Singapore and create a dialogue. We also have the UK-US Financial Innovation Partnership, and we're also set to launch next week at UK Fintech Week an initiative called the Fintech Export Academy, and that's basically providing UK fintechs, not just UK fintechs across the UK, with access to tailored support on how to enter a market in Singapore, Australia, or Hong Kong and Canada, and provided with that level of expertise in how to enter that market, whether that be competitor insights, either market entry advice, whether that be legal, or also even regulatory advice on some of the barriers that they might face in those markets and how to overcome those. So those are the few things that DIT are doing, and we're always here to support governments here always to support tech companies in establishing themselves here, and also act as a kind of launchpad into other markets around the world.
Perfect, thanks so much. And I think it's nice that a lot of the things you've mentioned there, as well as the things that Kiki and Chris have covered, are things that, Eamonn, you've probably seen, if not all of, at some point during your career with Techstars. So I guess to kick us off, I wondered, Eamonn, what was it? Techstars are a perfect example. Colorado headquartered, growing business, chose an international location, chose London. Talk us through that decision and what led Techstars here.
For sure. Well, hopefully folks on the call are aware of Techstars. But for those who aren't, basically what happened was back in 2005, 2006, David Cohen and David Brown, and now the governor of Colorado, Jared Polis, were looking at the talent that was in Boulder and Denver and around the entire state, who were starting startup companies, but immediately then going to San Francisco or New York to raise capital. And they were looking around going, there's a lot of successful founders, there's a lot of successful businesses here, there is angel investor capital here, all of the kind of hallmarks of a successful ecosystem are here, and yet we're kind of losing talent to the coasts. And so they thought, well, what if we set up a program to support that talent at home and give them access to some of those angel investors, give them access to some of that kind of institutional knowledge about starting a business that exists within the Colorado community. And that's exactly what they did. So the first Techstars program ran in Boulder in 2007. They opened applications, they invested in 10 companies. Back then, I think we invested $18,000 into each company. It's now $120,000. And then they brought in lots of different people, from founders, operators, subject matter experts from around Denver and Boulder, and more widely on, back then, I guess, Skype rather than Zoom, and tried to kind of support the founders as much as possible, but also kind of retain them in that local ecosystem, and it worked. And so they ran it again, and they ran it again, and then in 2009 they started getting interest from other cities, and so eventually Boston and Chicago and Austin and Seattle and New York in 2011 kind of came on stream, and all of them had very similar hallmarks, right? They were very strong ecosystems. They had a lot of talent. They had great universities. They had successful entrepreneurs. There was an angel investor community, etc. But for whatever reason, people were moving to other areas. And the kind of hypothesis that grew out of that from a Techstars perspective is, like, great entrepreneurs come from everywhere, right? Like, there's great business ideas coming from all over the world. And so as Techstars started kind of growing and growing in the US, I suppose, siren call of overseas expansion started to ring in their ears. And what actually happened was they had been approached by a guy here in the UK called John Bradford, who was running an accelerator program in the north of England, in Middlesbrough at the time. And he emailed David Cohen and said, "Hey, I'm running an accelerator. Like, how do I do it?" And Cohen said, "Come to Boulder and sit in and see how it works." And we've always taken this kind of open source approach to the way that we do things. So John came over, built relationships with the folks from Techstars, and then as they were having conversations, they started saying, well, actually, similar attributes apply in the UK ecosystem, right? You've got talent, there's capital. We were starting to see the early seeds of the tax incentive schemes like SEIS and EIS that allow angel investors to invest large volumes of capital into early stage businesses here. And so the kind of green shoots, as it were, from a Techstars perspective, were there. We saw, great talent in terms of companies, with lots of companies from the UK applying for Techstars programs elsewhere. We saw very, very strong mentors, founders who had exits, founders who had worked at companies that had become big and successful over here, from Love Film and King.com and lots and lots of others. So the expertise was there. And then from a wider, I suppose, ecosystem perspective, you've got everything from finance to fashion, CPG to automotive. Very large companies have their headquarters here. And so as we kind of looked at all of those factors, it became very apparent that London was going to be one of the big startup cities worldwide, which has been borne out over time. I think now, certainly from a European perspective, we can look at the UK market and say that by an order of magnitude, it is the biggest market for VC and angel investment in Europe. And actually, some of the next largest VC markets in Europe are Oxford and Cambridge and Edinburgh, so other cities in the UK, not just London. So the volume of capital that's been invested in the UK has increased substantially over time, both from UK angels and UK funds, but increasingly now, the Sequoia, Lightspeed, lots of US funds are establishing offices and operations here. We've had NextBlue and Hike and others come from Japan. We've capital coming in from all across Europe into the UK market as well. And part of that is something that Kiki alluded to earlier, is actually from a time zone perspective. There's 5 p.m. in the UK is 9 a.m. in California, right? So there's overlap there, and 9 a.m. in the UK is 5 p.m. in Tokyo. And so you're overlapping with a pretty substantial swathe of the world's kind of business, to say nothing of the fact that you're within 1 or 2 hours of most cities, or 2 or 3 hours of most cities in the Middle East, every city in Europe, and pretty much the whole of Africa. So I think from a location perspective, there's a lot to like there. From a talent perspective, the university system here, from a machine learning side of things, you've got UCL, Cambridge, Oxford, University of Edinburgh. From a business perspective, LBS, Oxford, University of Manchester, University of Warwick, lots of others that probably wouldn't thank me for not mentioning them, but I could give you an exhaustive list, but this would be a very long Zoom if we did. So from a talent perspective, you've got graduate talent coming through. You've also got talent that has now gotten lots of experience at companies that have UK headquarters here, like Deliveroo and TransferWise, Revolut, and big international companies like Facebook and Google and Amazon and others that have opened offices here. So people who've got experience of scaling businesses and operationally scaling businesses internationally, which I think is kind of really critical for everyone. And again, as I mentioned, from a partner perspective, you can be in Canary Wharf or in the City of London meeting, every major bank or insurance company at 9 o'clock in the morning. You can then get on a train and go 6 stops and meet every major fashion label that you want on Savile Row in the afternoon, and then go probably another 10 stops further west and meet every major media company and movie making studio in the west of London in the evening for dinner and cocktails, because they probably do that part better than the others. So, you know, I think it's got this real breadth of industries that you can engage with and that you can speak to. And, you know, I think all of those factors are real draws and real pulls for business, plus, you know, similar language and then that regulatory environment, which, you know, not just from a fintech perspective, we have a lot of companies that are working in drones, in you know, autonomous deliveries, etc. Like the Civil Aviation Authority here have a regulatory sandbox, which is incredible, and is enabling tons of companies to do really interesting work. And you can start to see more and more industries start to unlock from a regulatory perspective, which is hugely valuable when it comes to doing pilots, doing prototypes, doing it in the right way, and giving yourself the best chance of success. So, you know, for the companies that prep properly and do the right type of planning to expand here, you know, the opportunities are pretty substantial.
Yeah, definitely. I completely agree, and thanks so much for that. You've offered a lot of insight into the ups and downs that we can offer here. I'm going to dive straight into the Q&A, because I think there's a question that we had in advance that I think speaks really well to what you've just said, and I'm sure you can give a really good answer to it. And that was, if a US company does expand to the UK with the intention of innovating, performing R&D, what sort of support can they expect to be provided with? What sort of resources are available to them when they arrive here in the UK?
Yeah, so I think there's a huge amount of support available. I mean, I think there are not only obviously accelerator companies or accelerator programs like ourselves that are always happy to help. There are government supports and local supports like London and Partners and others that help companies get established here, get them connected to, you know, the folks that can help with all of the infrastructure, legal, accounting, etc. that they need to do correctly. There are substantial Innovate UK grants available across a wide range of sectors for businesses. There are R&D tax credits if you're establishing, particularly, you know, if you're a tech business or a biotech business and you're going to be doing some of your research and development work here, there is the opportunity to get some of that capital back and that expenditure back in tax credits. So I think there are a huge number of funding supports available, as well as a pretty favorable angel investor and VC climate, which is accustomed to investing in Delaware C Corps. You know, there will be very few. Some angel investors may not do it just because of the tax incentives that exist for investing in UK entities. But again, for companies that are coming over here, establishing a permanent establishment, etc., then there are opportunities to access some of that capital as well. So I think there's a huge amount of support, not just from a mentorship, advice, and guidance point of view, but also from a grant and equity funding perspective as well.
Yeah, definitely. And Stuart, I wonder whether from DIT's perspective, you had anything to add to that on the support and resources?
Yeah, definitely. I think so. We commissioned a report last year to look at the strengths of the UK fintech regions, and what we found out was that the regional fintech organisations like Fintech Scotland, Fintech West, Fintech Midlands, they're really well connected within their own ecosystems and are really well connected with accelerators that run programs and kind of that basically center a lot of connectivity with other main players in the ecosystem. So I think there's definitely a lot there that tech companies that want to come to the UK can really leverage off. And I think we've also touched upon the financial side of things. There's definitely venture capital schemes that companies can benefit from, such as SEIS, EIS, and also the Venture Capital Trust Program. So I think all of these programs definitely help companies innovate. And we also, as I discussed in my spiel, there's the regulatory sandbox that the FCA runs every year. And that's definitely one key source of where, you know, tech companies can definitely leverage their solution and really test their product in a very safe environment, and then use those insights to basically improve their products and make sure they're compliant with regulation and able to sell them to the market.
That's great, thank you. And I like this one that's come in. We had a lot of questions in advance, so I'm trying to work through those. But if people do have any other questions whilst we're going, feel free to use the Q&A box now. We'll try and get to them. But I'm conscious of time, so we'll whip through them as quick as we can. And this one was what's the number one mistake that companies make when they enter the UK market? Eamonn, do you want to take this one as well?
Yeah, I mean, I think there's a quote which I'm sure has been attributed to dozens of people, but Often in Ireland, where I'm from, it's to Roy Keane, who is the captain of the football team. And it's fail to prepare to fail. I think a lot of companies don't do the systematic upfront work to kind of, really run a process to decide where they're going to expand to internationally. And even when they think about international, the UK is quite a large place, and the difference in cost, this was alluded to earlier, the difference in cost between hiring people in London versus Liverpool is pretty substantial. Your difference in staff retention and duration of staff retention will be very different there. So I think companies need to be quite granular in the amount of preparation that they do for expanding. I think they need to really think about, what is their hiring plan going to be? Are they going to hire, a local country manager? If they do, are they going to onboard that person in their local market, etc.? So really that kind of upfront preparation and spending a lot of time on it, and not just assuming, which I did with my first company, I'll get in a plane and I'll go to New York, twice or three times and hang around for a day or two, and that's our, I'll get a, Google Voice telephone number, and that's my international expansion done. It's turns out it's a lot more complicated than that, and that proper planning produces amazing results.
Yeah, definitely. And I think you've opened the door there. You've mentioned the word employees, so it's only natural I throw this one at you as well, Chris.
I mean, I think actually this is probably not a very legal answer to give you, because it's but it will turn into one. It's actually following on from what Eamonn said. I think it's finding the right talent or failing to find the right talent rather, is probably the number one mistake that companies make. And the reason I say that is because if you haven't found the right talent, you'll often find that you have cultural issues in that UK office as it grows, or perhaps the UK office won't be quite performing as you want it to, and then that creates human resource issues for you to have to sort out, and that takes time, and that takes management time. It can be costly. You might have to spend some money on some legal fees as well. And I've countless times seen clients that have gone to the UK, not because they've planned it, but because they have come across a sales guy who's told them that he's got lots of great connections in the market, and often it transpires the only thing that he's ever really sold is himself, and it's never really worked out in quite the way that they want it to. But they've expended a lot of time and effort and resources and money in setting up to employ this individual, and then it's not worked out, and then they've got to deal with getting it wrong. So I think getting that talent right, and that might be moving someone from the US over to the UK to get that office up and running. And there are immigration opportunities to do so. I think getting that right is the key to getting the UK market entry right, and getting that wrong is the number one mistake that people make.
Yeah, that makes a lot of sense. It's you hire the wrong guy, it's not going to go well. So a couple of slightly more technical questions we've had in. I'm going to try and combine them in the interest of time. One of them was, does using a PEO create a permanent establishment in the UK? And the other was, if I have no physical presence, so no employees, no office, am I still required to register with the UK authorities? So I assume Companies House, HMRC. Kiki, this feels like bread and butter for you, please. Oh, we went so well without you being off mute, Kiki. We were doing so well, but maybe hit that button and go again.
I'm ready to go now. Sorry, we had a bet before this that I would be on mute when I started talking, and I've clearly lost the bet. So yes, PEOs. These are where you've got a third-party provider who's going to be your employer in the UK. One thing I would say, and it does kind of correlate with the previous question, if you're going to come and do some global expansion, do it properly, be committed. I'm not always sure whether going and finding the best talent and then saying to them, well, we really want you to join us, but we're not really that committed to having an entity just yet, so we're going to employ you through this third party, is probably the touchy-feely welcome that best talent is going to want to hear. But in terms of permanent establishment, what this is an expression that's used in the tax world, which says, if you're a business and you're operating in a particular location, is the operation that you've got and your activity attuned to having a business presence there? And what are the implications of that? So if you use a PEO and you've got this third party provider being the employer, it doesn't stop that employee representing your business. In fact, they are there to represent your business. they're probably sitting in some kind of WeWork office or leased desk that you've provided for them. They've probably got one of your laptops and plugging into your IP branding and doing lots of things to make sure that some local noise is made about your business and your products. So just because the employer is a third party, it doesn't mean that you as a business are not active in that country, and therefore it probably means that you have got a permanent establishment. So you are going to have to register with Companies House, which is our kind of register of businesses. It's a very public domain, so everyone can plug in and see who's on there for free. And you can either do that by setting up a company, so a separate entity, be a subsidiary of your company, or you can register your existing company in the US as a branch in the UK. So what are the advantages? Well, if you've got a subsidiary in the UK, it's really good because it ring fences your commercial risk of any activities in the UK. And it also means that you can manage your tax liabilities in relation to those activities. So you might want to think about going down a cost plus basis rather than having the profits from actual revenues and sales. So there's a little bit of planning that can be done that's not too controversial. So think about that. There are some other items that mean that your company will be active and visible. Are you going to be running some kind of marketing program? Is your employee who's employed by the PEO having you as the employer on their LinkedIn profile? Very public. What's their job title? It's not going to be talking about the PEO name. So you just have to be a little bit careful. And I'd say, if you're going to go in for it, do it properly and just commit and do it in the right way and not try to hide behind anything.
That makes a lot of sense. And in the interest of time, I'm going to ask one final question, and it's from me. And it's you know, I'm sure a lot of our attendees, after listening to you all say your bits, will be rushing to come over to the UK now. And if they're going to do so, kind of what is that one piece of golden advice that you'd give, your kind of hot tip? And I'll go to you first, Kiki, but I can't help but feel you've probably just said it.
No, actually, I have got one further point. Sorry. What I would say is you've probably got a great infrastructure around you of people who've been here and done it before, not just in the UK, but other countries. So ask your friends, ask your work associates, anybody who around you has had experience of going global before, ask about their experiences, recommendations for advisors, ask them what worked well, what didn't work well, and just use your plethora of people and network who've done it before so that you don't have the pain of learning the hard way.
Great, thank you. Sorry for trying to second guess you there. It's my mistake. Chris?
I will give the lawyer's answer here. Get documentation in order. It's something that we see goes wrong all the time, and it's really not hard to get right because it's really easy to access the right sort of standard forms that will give you almost off the shelf what you need to make sure that you're engaging contractors in a compliant way, or you're engaging employees in the compliant way, that you've got your privacy notices sorted, that you've got your pension set up and that's documented. It's easy enough to do, but make sure you do it right, and that will make life much more straightforward for you.
As an auditor by trade, I can very much get behind that answer. Stuart?
So my advice would be, I'm going to put my DIT hat on and say, reach out to DIT, reach out to government. There's always people that we're connected to that can definitely, ease a process regarding entering the UK markets. As I mentioned, we're launching this initiative next week, and we partner with law firms, other management consultancies. So we know who the experts are. So yeah, please feel free to reach out to us, and we can try to smooth the journey as much as possible, because it's definitely difficult. And also make sure that you're well aware, it can be a bit tricky sometimes to open an account, a bank account for a fintech. So make sure you do your homework and that side of things. And again, we also have experts within DIT that can help you navigate that process.
Yeah, definitely. Banking's a hot one. I think people can easily forget how long and drawn out that can occasionally be, particularly at the moment when you can't get on a plane and get in front of these bankers. And to close us out, Eamonn, please.
I think, you know, do your homework and do your research and make sure it's the right decision from a timing and a capital perspective and a business perspective, etc. And related to that is just kind of an amalgam of what's already been said. Don't be afraid to ask for help. You know, this is a very positive business environment. There is a great relationship between companies and people here in the UK and companies coming in from the US. So I think you will be pleasantly surprised as you reach out to any of the organizations represented here today or others, that they will happily, you know, help with referrals, recommendations, you know, references, etc. for people that you're trying to hire, or just advice and guidance on mostly what not to do to avoid some of the pitfalls that may ensue.
Yeah, definitely. I know we've had clients certainly that have waited a little bit too long to ask for help, and when they do, you physically see that breath of relief on the during the meeting when they realise they've asked the right questions. But no, that's great, and thank you so much. And I think slightly ahead of schedule, we'll end it there. But before we do, thank you so much to our panelists. You guys have been brilliant. I think you've really added a lot of value and insight for our attendees there, and I'm sure there are people that might have some follow-up questions, but as I've said, we're happy to help, and our contact details for all of the panelists and myself will be circulated to people that have registered afterwards. So thanks again, panelists. Thanks very much for joining us, participants. I hope you all have a great day, and we'll speak to you soon.